So syndicators, their mindset, their knowledge set is only related to existing buildings. And so sometimes they fail to see why buildings are going up in certain areas and not going up as much in other areas. And it has to do with the cost of construction per unit. So a lot of these smaller markets in the US, for until maybe about 2017, 2018, the cost of construction was about $100,000 a unit. Okay. And today, because of the crazy inflation that we've seen in construction costs, in a smaller market, you still cannot make a new multifamily unit for less than 200,000. So it's jumped from $100,000 a unit to $200,000 a unit in 4 years. What this means is in these smaller markets where rents have not yet risen this, as much as they have in the big markets, it's impossible to build new product. It simply isn't, because if you build this new product, rents have not risen enough for you to make any money or break even. So it would be silly for you to basically build these new units. And so we have this supply demand gap where rents have to go up about $450 a unit in these smaller markets for a developer to consider building anything, smaller, bigger apartment complexes. And that is the biggest opportunity in America today. That's the one that's left over. Smaller markets, $450 gap on average between what their rents are today and what their net rents need to be for new competition to come into the marketplace in the form of new construction.